Hello there, welcome to this week's Dividend Cafe. We're filming for the second week in a row from New York City. So yes, we have been here now for a little over a week and actually have a few more days to go. You may see the setup here on the coffee table in my suite at the hotel. Notes after notes after notes and decks and flip books and all the different things we're receiving from money managers, hedge funds, all these different conversations. And each night I come back to the hotel and kind of process through it all and make a list of what are actionable decisions and organizing thoughts and maybe where we want to make some changes and so forth. So by doing this right now in the middle of the week, I haven't, totally finished that kind of mental absorption of everything we're taking in, because we're really kind of in 12 hours a day of meetings with municipal bond managers, with hedge funds, with economists, with equity managers, long, short, emerging markets, all of the above. An awful lot of fixed income meetings on this trip. And so it's a annual affair, as a lot of you know. This is our 11th year doing this, and each year we get something very substantive out of it. And as far as what the kind of final conclusions are going to be, we'll wait a bit more to kind of finish up. As a matter of fact, we're taping this right now on Thursday morning because I'm going to be in meetings till late into the evening tonight, and so we wanted to get this done now, and then in a big symposium all day tomorrow, Friday. Markets are kind of all over the map a little bit right now. As of right this second, we're down about a little less than 100 in the Dow on Thursday. We were up about the same yesterday, down the day before, up the day before. So it's kind of bounced around a little. But earnings season starts next week, and so anticipate that to be the big driver of markets. I am more and more of the opinion that the Fed will end up raising rates in December by 1/4 point. The market was only pricing in about a 50% chance of that just a week or so ago, and the Fed funds futures market is now showing a 68% chance. So I think that looks more and more likely, although there are a number of macro events that could change that forecast. The election polls are moving more and more towards what may end up not being a very close presidential election. Of course, there's still a month to go, and the election has certainly been all over the map for a long time. So for those that would conclude that it's right now very likely Hillary Clinton victory, I think that's probably correct. But of course, the news is fluid there, so anything could change. But I don't anticipate election issues becoming a big issue for markets, which really leaves us with earnings, the Q3 results that we'll report throughout the next 6 weeks here during Q4. And then I think the central bank and feelings as to how the central bank is going to go into 2017. So those are the big things affecting markets right now. For us, we're very much of a mindset that we want to be bottom-up oriented, finding high-quality individual investment opportunities, companies that are as reasonably disconnected as possible from the macro state of affairs, what we call beta, relying on the entire market to necessarily go higher. The market could very well go lower into 2017, and it could very well continue going higher. Both arguments for both sides of that are legitimate. However, we want to be as agnostic as we can about the overall market viewpoint and focus on idiosyncratic investments, whether it be in the alternative investment space or even in our long-only equity side, traditional stock investing, our dividend growth. We want to be a place where we think we are in not only high quality, which a lot of the high quality is pretty expensive right now, but also that has unique stories, that has a value proposition as to where these things can continue to perform, grow dividends, be somewhat defensive. So it's a tricky environment, and we have a lot to do into fourth quarter, positioning our clients into 2017. So all that to say, look forward to being back in Newport Beach on Sunday. I certainly miss my family and miss my team. Our analyst and portfolio director, Dea, is out here with me, and we've enjoyed the meetings, enjoyed visiting a lot of clients this week. But let us wrap up our work, come back to you with some hard conclusions as to what we're doing and share more of those thoughts with you. With that said, I'm going to run to my next meeting, and thank you for listening to Dividend Cafe. And please subscribe on YouTube, and check out dividendcafe.com anytime. Thank you.